The Japanese macro environment has for a long time benefited from a very unique money policy, which is negative interest rates. And what that's created is almost a realm of financial tourism in Japan. I still think the market won't be that responsive to purchase when there's still a potentially bit of unknown and uncertainty in the air. Again, if we start to see very strong activity from these institutional buyers, it kind of does sort of help frame that story that this could have been an isolated incident affecting obviously quite a few people, most likely, but it's not broad enough that it's going to bring the whole market down. Hey guys, welcome to this week's episode of the Tapping Into Crypto podcast. My name is Pav, and it's just me today. We have Ted out sick, unfortunately. Time will tell if he's actually sick or if he's just absolutely throwing up, given what's taken place in the markets these last 1 to 2 days. So we're recording this today on Tuesday. Obviously, as a lot of this great market sell-off has been obviously in the front and center of all of our minds. So hopefully by the back end of when we release this podcast on Thursday, there's a bit more clarity on what's happening. But I thought this episode, because you have just got me, it might be good just to spend a bit of time unpacking what caused a bit of the blood in the streets that we're seeing this week. I mean, it's obviously, to some people, probably a little bit unnerving, including myself. I mean, this did just sort of, whip almost out of nowhere. And all of a sudden, we've just seen lots and lots of momentum behind the selling pressure that we've seen in the market. But I really just wanted to unpack why are we seeing things like Bitcoin dropping under 50K, Ethereum heading back below $3,000. I mean, these are prices that we haven't seen in quite a long time. And, as we spoke about the most recent episodes, from a fundamental perspective on the macro, we had, only good things showing up. And, we were seeing key monthly levels previously as well, retested by the market and bought up as well. So look, let's just dive right into it. So, I mean, a lot of the movement that we have been seeing at the moment has been attributed to a lot of things. But I think to me, what makes the most sense from what I've been reading at least is the fact that a very, minor event to some has caused a major trickle effect across macro markets. So specifically the Japanese interest rates. So we'll dive into why that matters. But from there, I think we can sort of taper into where things look like they're going next, and what I personally be watching for to sort of see are things improving, or there's still quite a bit of uncertainty. And obviously, even today being Tuesday, we have seen quite a bit of buying. So is this sort of buying that we're going to start to see continue, or is this just a simple flash in the pan and there's more downside coming? So we'll sort of dive into all of that, but we'll start with the why. So let's kick into it. So just to reaffirm what happened last week, the Japanese macro environment has for a long time benefited from a very unique money policy, which is negative interest rates. So the way you and I might go to a bank, borrow money for a house, etc. In Japan, due to a whole number of reasons that we won't dive into right now, they for a long time have actually had negative interest rates. So they've been incentivized to go borrow, deploy and grow that money, right? And what that's created is almost a realm of financial tourism in Japan. So there's quite a few people that are, institutions mainly, I should say, not people, bodies of people with large amounts of funds that will go to Japan, basically engage in a 0% interest loan for argument's sake, and then move to countries like US where they can earn a steady return by holding US dollars and basically counteract the two. So that's what we call a carry trade. So taking a country that has a lower interest rate and using that money again with a country that has a higher interest rate, and that's a yield can be generated by that activity. Now that's sort of been propagated one leg further, where over time, this is a system that's been running for going on 20 years, according to the data that I could dig up. You could then also diversify and double down in a sense, where you could borrow yen at a 0% interest rate, backed by some sort of collateral always, and then go and purchase something like US stocks. So again, a pretty common practice. So when you add the two together, the interest rates all of a sudden kicking up a notch, a whole bunch of institutions with their risk radars flashing red. Likely a lot of fund or asset managers had gotten the tap on the shoulder, basically saying it's time to unwind and de-risk a lot of these positions. And that could be what we, essentially have seen. Another way you can sort of track just the rate of change which we saw prices move is looking at volatility indexes. So we have the VIX, which is measuring volatility of the stock market in the US. reaching levels that we really haven't seen since COVID. The worst pandemic in the last 100 years. We hit a tick high of 65 on that particular reading there. And you can sort of see on this image that I'm bringing up on the screen share. Come check us out on YouTube if you want to come see what we're bringing up on the screens. But the last time we saw figures this high obviously have been around things that have sort of moved and shaken in terms of global events. So, for example, the GFC, obviously being the worst one on in terms of volatility, that ticked up to 90. COVID, we got as high as 85, and this most recent move, we got 65. So, even other events like the dot-com bubble, we only saw that get to 42 back in 2002. But I mean, whole different set of macro environment now versus then, a lot more leverage in the system. So when we do something, see a system like this where a lot of leverage was in the system, become undone, we are going to see a lot of volatility. And this is, obviously very interesting times right now because, we've got this broader picture of institutions that we can't see, making these moves. It's hard to know if really this is it? Is it done? Or is there still a little bit more to come? And I think that's the hardest thing to understand. But what we do know is that the market obviously has a sentiment and a feeling towards what's happening around it right now. And a big part of the puzzle that we've always spoken about on the podcast is interest rate drops. And, again, this is only sort of adding fuel to the fire, but the whole market is now expecting with the 18th of September interest rate decision coming in the US that there might be a 0.5% or a 50 basis point drop coming, where previously it was favoring anywhere from 25 to 50. So, I mean, if we can take away anything from all of this, it's that the market, even though it's seeing selling right now, they are sort of forecasting themselves that the fear is here, this Fed's going to have to step in. There's a lot more at risk if they don't step in sooner, that there's going to be more frequent or a higher rate of cuts coming as soon as the September meeting. So I still think the middle of September is going to be a very, very important time on the whole roadmap of where the markets are going. And it has also played into previous market cycle seasonality, where we have seen Q4 be the real period where the markets have moved in the past. So we will see if that obviously bounces back to be the situation again in time. But right now, it seems like the whole market, in terms of how it wants to respond right now, they're more forecasting that essentially government has to step in and do something, right? And that's kind of where we're at. We were at a point where they were even speculating there would be emergency rate cuts to try and curb the selling or, reduce the amount of damage being done by the panic selling in the system. But the possibilities of that has dropped off quite a bit, especially after we saw overnight the US in particular, and even this morning on Tuesday, the Japanese stock market surging over 7% on the open. So, I mean, it's really hard to sort of know what to make of the whole situation right now. Obviously, if the whole thesis around this is just a few institutions unwinding very, very, very large portfolios, rather than something systematically breaking, we might be in for a few more days or weeks of things just going up and down erratically until we sort of start to see what's the trend that starts to develop. But for me, hopefully explaining that clearly enough, I mean, something that I'm paying attention to more than anything else right now, more than ever, is the Bitcoin and Ethereum ETF flows. So again, if we talk about this is a rolling effect from larger institutions, agnostic of crypto, it's across the board. We'd want to see the buying behaviors and patterns with the products like the ETFs still sort of follow the similar trends and trajectory that they've been on in the past. So one thing I will call out, in the overnight session that we can call through to last night when we were seeing all the selling, we did see some of the Bitcoin ETF products actually end up buying more than selling. We did see selling across the board as the general trend, with negative $168 million in outflows, but it's still less than what it was at the end of last week. So the 2nd of August showing negative $237 million US. So farside.co.uk, you can check this out yourself and track along at home. But essentially, we're talking about selling momentum, right? So if we were to see selling momentum pick up on the ETFs, that would be a warning sign for me personally. But again, if we start to see this even just go a little bit dull, a little bit boring, just days of where the net selling and buying is around these sort of figures that we're seeing right now, we could see the market sort of respond in a pretty similar way, very lethargic potential recovery, or it could be a very lethargic continued sell-off. The inverse of that is true as well. If we do start to see a lot of these Bitcoin ETF flows kick up really, really aggressively, like we did back in the middle or back end of July, where we saw, within 2 days, almost $1 billion of Bitcoin being bought up, at pretty similar price levels to that what we're at right now. I still think the market won't be that responsive to purchase when there's still a potentially bit of unknown and uncertainty in the air. But again, if we start to see very strong activity from these institutional buyers, it kind of does sort of help frame that story that this could have been an isolated incident affecting obviously quite a few people, most likely, but it's not broad enough that it's going to bring the whole market down around it. So that's a key thing I'd pull away from this as well. And even looking at something like the Ethereum product from the ETF, so far we're in the black in terms of we're still waiting on the BlackRock ETH product to release its figures, but even the Grayscale product, there was much less selling than there was the previous couple of days. So we've seen that step down quite a bit. So again, if this was really bad, we're going to see continued selling off. I would be expecting this to be much more red than what I'm seeing right now. Now, if we jump over to a chart of Bitcoin, we can have a look at where we are sitting and we have been following this large trend for quite some time now, and all we're doing is connecting highs and lows. So if we take the March high, which is 73,800, and the most recent low that we have seen in the early parts of July, 53,000, we can see that today we actually had a pretty interesting bit of price action where we did dip below that most recent low of 53,000. Traveled as low as 49,000, but we have seen some buyers step in or some sellers step off, and currently price is trading back inside this range. So range is a pretty good way to sort of understand how market's behaving at range extremes, and that's where you see the decisions being made in terms of are people more on the bearish side or the bullish side in the way that I interpret the market. But again, it's still too hard to sort of say if this is the recovery starting or this is just one of the many bumps in the road that we're going to see before the overall recovery does come in time. Or are we just going to see a potential continued sell-off and, we go to test maybe some more lows in the mid to high 40s as well. So, any sort of situation is still possible now, unfortunately. Another thing I can point to right now is looking at something like Bitcoin dominance. So Bitcoin dominance, we have always speculated that we might see it track back up to these previous highs as almost like a general key level before we start to see it cool off. And right now we've just seen it step up and up each week. So this is a weekly chart where we're sitting at 56% currently. And whether or not we continue to proceed to go towards this range of 60%, I think these are the current conditions where we would maybe start to see altcoins sell off into Bitcoin, especially if there is a Bitcoin-led recovery out of this area. And altcoins do take a little bit more time and conviction before they can start to see buying across the board. But we also are hitting into these previous lows as well. So again, if we were to cool off and just go sideways for some time, like we have been talking about as a general theme today on the podcast, even something like Bitcoin dominance looking strong, it might still take a little bit of a breather and a pause here before it chooses to push higher or lower. Either way, there is a little bit of key resistance there on that chart as well. Another way we can view how the market health is looking is looking at total 3. So this is a overall picture of what the altcoin market cap looks like. So we're removing Bitcoin, removing Ethereum. And again, we have just quickly wiped out a lot of these previous lows, very similar to the Bitcoin chart, but just a lot more aggressive in terms of the downside moves. So still a lot more to be seen here in terms of, before we potentially start to head up. I mean, a quick way I like to sort of frame how to read these charts sometimes is, within 4 seconds, if you look at it, does it look like it's going up or down? To me, this looks like it's still going more down than up. And that's, even if we put a moving average on it, it's going to look pretty similar as well. Still seems to me, while we could be finding support on these previous highs where we did have a big breakout, it could take some time before a recovery sort of comes, as we've seen in the past. If we can look at January 2024, while it did sweep similar lows in a similar fashion, it didn't start trending until about, 17 days after we saw those lows. So again, we could be seeing out August as a pretty quiet month, and maybe towards the back end of this month, we see get a bit more clarity in terms of what direction are we going. Now, I also just wanted to dive right into our regular weekly crypto market moves, because I think right now is a very important time to paying attention to what's moving and what's not moving. This is one of my favorite ways to approach a market, especially after some big moves, to understand what what are the leaders? What are the category leaders? What are the general top performers amongst all the hundreds and thousands of cryptocurrencies out there? So, looking at the crypto bubbles, not much of a trend to really look at if we look at weekly performances, lots of big losers. But jumping in on today's activity, I'm seeing a lot of old faces show their hand, I guess. So we're seeing Tau, so the AI narrative, a little bit there, up 32% today. So again, I'll be putting that on the watch list just to see if it continues to be bought up upon any dips. And, maybe that's one I'd look at for a potential investment. HNT, which is one that we saw all of 2023 be a very good top performer. It's got that up 19% there today. AKT, so a cash network, again on the AI and DePIN narrative there, 32%. We've got Aave, which is one we've been pointing to a little bit more frequently, and I'm finding more and more each week, specifically because it is a DeFi protocol on Ethereum. We did mention on the podcast a few weeks back that the SEC, along with the Ethereum ETF going live, they were looking to drop all cases against anything in that sort of Ethereum ecosystem in terms of labeling it as a security. So that's a really big win for DeFi protocols, where they need to see adoption and daily active users. So if they don't have this overall burden that they're going to be chased after by the SEC, obviously creates a bit of positive sentiment towards these sort of products. So again, I'll be watching Aave as I have been for a while. Same with Ondo. I sort of see Ondo and Aave in the same sort of space almost. Ondo being a real world asset project on Ethereum. They're looking to bring TradFi products to blockchain. So things like just the interest rates that you might get in a bank, being able to access the same products through DeFi on Ethereum. That's kind of what they're looking to solve as a problem. That's one that might also continue to show a bit of strength. So I'll be keeping an eye on that too. And in terms of the meme coins, we're actually seeing Brett, so a meme coin on the base chain, leading the way at the moment in the early stages of this current recovery. So we'll see how that goes in the coming time as well. But seeing less Solana memes, more Ethereum memes. We've got Floki, we've got SHIB. So again, just another trend I'm seeing there as well. But other than that, I still think we're seeing an overall market recovery after the sort of sell-off that we did see. I'm not surprised to see a lot of things up close to 10% right now. But for me, it'll be I'll be clearly watching what's the overarching trend over the next 7 days, over the next 14 days. I still think it's very early from my personal perspective, for me to call that this is it. This is where we start and this is where we finish this down move, because it can take potentially a bit of time to recover these movements. Unless something else happens that we're not expecting. And that's, when I sort of mentioned, we're quite early into the sell-off and you guys won't hear this until Thursday. It is completely possible that by Thursday we have another major announcement that changes fundamentally how the markets are operating currently as well. But even without any assistance, it does seem like most markets, even the Nikkei, which is the Japanese stock market that we talked about, even that jumping up 7.3% today alone sort of tells you that there's enough positive sentiment likely still there to be buying and not selling after a big red day that we did see. So very, very interesting times. So, but that's it from me today. Potentially a bit of an information overload, but the long and short of it all is, obviously this is quite a serious event on the roadmap of what we've seen in our industry. It's not something a lot of people were probably banking on happening, myself included. But this is also a great example of why you need to be diligent in terms of risk management through your portfolio, making sure on a day like today, it's not really affecting you too much. Obviously, if you're sweating and being kept up at night after moves like this, it probably is a good sign that you have potentially too much on risk at the moment for what's comfortable for you. So just a good time to also just reevaluate your own portfolio, just what's your plan financially as well. Obviously, seek any advice where it's appropriate. But a lot of this right now, it seems to be in its early parts of it, quite an isolated reason for why it happened. If it is just the idea of these larger institutions having to unwind their positions and having to do so quite quickly, causing a massive change in market prices. But if we do start to see things like US stock markets, etc., start to be continually bought up over the coming days, coming weeks, that's going to be very positive for me. But the opposite of that is true as well. Every time we do see markets buy up, they instantly sell back down the next day. That's not going to be a positive sign as well. So that's why I still think it could take a couple of days, maybe a week or two or so, just to sort of see where this does iron itself out to be. But that's all from us here today. Next week we'll have Ted back and the full crew ready to hopefully digest and unpack the markets all again for you all. But stay safe out there and all the best.